So is the beautiful stock market crash canceled? Is it going to start a new bull rally, or is it just getting started and faking everyone out to the upside before we ultimately go down? That's what I'm going to be trying to answer today on this Weekend Deep Dive, guys. We're going to go over the exact levels you have to know to trade the market by yourself without anyone having to show you what to do. Very, very simplistic, broken down levels. We give this out every single week, and they have been tremendous in basically running the last year and this year's performance on the market. And as we can start off by reviewing the week with NVIDIA. Big up as it goes into its CES keynote speech. Jen Sung will be delivering the keynote speech. So this is like Apple's event, right? Like when Apple has an event, their stock traditionally goes up into it. And it could be the buy the rumor, sell the news type of event. But NVIDIA has been pushed down pretty significantly. It hasn't really seen this big rally like the other participants since the last earnings. So we could be in store for some big AI-led rallies this week. Or is it going to fuddle and basically crash the market like Apple has been doing? Who will get to that $4 trillion mark first? Apple sitting exactly at 3.68 market cap versus NVIDIA of 3.54. So all it would take is one of these big players to start rallying as they're neck and neck, as S&P gave us a lot to digest this week. So without further ado, let's dive into exactly what happened this week and talk about some of the Fed members that actually came out and gave us some more information. So first things first, for all the bulls out there, you haven't actually won. You started to get to the gap fill, but you have not completed the gap fill, right? They defended the 50-day, they're not above the 9. So we're in this holding pattern, I would say right now. This was significant because we broke to a lower low on the S&P from the Powell week. And what I'm referring to as the Powell week is this major candle right here. That was the low volume trading, the capitulation style volume that we kind of saw, and we saw another bump as we pushed out. However, this is awfully looking like a failed head and shoulders pattern right here, where you should have broken the neckline, broken downwards, failed to break down, and subsequently now is forming more of a W pattern, which is W for the win to the upside. However, let's not get ahead of ourselves. We got a lot of things we have to get above. We got to fill these gaps. We got to get back above the weekly levels. We have to continue heading higher. That's all got to happen. We're going to be talking about the exact levels in just a moment, but I want to recap the indexes and some of the news that's going on with the Fed first. So we're looking for this week to be a 50-day moving average break on the S&P. And also the NASDAQ was one of those bigger players and is probably going to be another big player this week. We got the gap fills that are in blue on the chart here, where we're going to be looking for that momentum to continue back upwards. Again, this definitely looking like a W on the NASDAQ, forming a massive lower low, breaking through the 50, quickly rebounding. That was a nice Friday push. Everyone was basically thinking, hey, market closed below the 50-day, S&P's below, IWM's below, NASDAQ now below, okay, clear downside. But the market stepped up and basically bought this all back up. Nice 1.64% on the NASDAQ, 1.25% on the S&P. It was a magnificent gap and go days. These are the days that if you're a bull out there, you live for, because they're just fun, period. They're plain and simple fun. Got to the key rotation point, failed weekly breakdown as officially occurred on both indexes. We'll talk about exactly what that is in just a second, but it's mainly this right here, where you went lower on the weekly level, formed a weekly lower low, but failed to hold it. Similarly, we can see on the weekly candle, as you see here, right, not below the previous week's low. That is a clear sign of possible reversal, but also you broke out of the range of this previous massive week's candle right here and failed to go anywhere, right? So that you broke down the range, and then usually that momentum gets reversed. That's why I'm kind of thinking more to the upside. That's just going to be my general bias. I'm positioned also that way, biased to the upside, but I'm also very, very aware that we could see downside potential at any moment in the market, right? Again, we're not necessarily immune to downside. I'm thinking we're going to be to the upside with a lot of these events coming, and we're going to talk about all of those. But let's also talk about the Russell. And I said the Russell last week was probably one of the key indexes to watch. And the reason for that was small caps traditionally don't form gaps on the chart, so there's not a lot of polarity to pull them anywhere. And they were just doing nothing, right? The Russell, as the NASDAQ and S&P were selling off, they were just like, I'm here. Yeah, I'm here. But it was quite surprising to see the Russell just very range-bound weak. This is a massive coil that is forming right here that is essentially going to break out massively. And I do think the Russell is probably going to be the most underrated trade of 2025. Why is that? Well, let's simply go to a monthly view and just zoom out, right? When in doubt, zoom out. This is definitely looking like a cup and handle forming right here. So essentially what that means is we're going to rally 40% on the Russell based on the cup and handle pattern right here. And subsequently, Because of that, we have a large opportunity to short squeeze on the Russell. A lot of the small caps have underperformed significantly. As we saw, we went to all-time highs in November of 24 and then subsequently failed to hold them in December. So the Russell hasn't made an annual new all-time high close for quite some time, right? We're looking at we got to go back to roughly 2021, whereas the S&P and the Nasdaq have made several, right? 2022, 2023, 2024, new highs established in those years. So we're definitely looking for that pattern, right? We're definitely looking for those selling tails that we were mentioning before right here on the candle. You can see that it has that selling tail that we see historically on very bullish continuation years. So that's what we're necessarily looking for, right? We got the retest of the annual lower low. We gapped down, pushed up on the S&P and the Nasdaq. So really the purple line, which is going to be signifying on any of the chart you see, a yearly level of where the previous year closed. So that's going to be really the gauge to be bullish or bearish. Are you above last year's performance or are you below last year's performance? That's pretty much going to be the gauge for me going into 2025 to know if I need to play a stock bullish, not play it at all, right? I'm definitely going to be leaning towards the bullish side. For example, Netflix, that is currently below its annual, looks to be bearish, looks to want to push down to the 50. And subsequently, that could be something bearish heading into their earnings, or it could be basically a momentum reversal. We're going to be talking to Netflix and all the big mega caps in just a moment, but I want to dive into the S&P first to give you guys the weekly levels that you all come here for. So if you guys follow the channel for any quite amount of time, you can kind of notice a pattern with these weeks that are traditionally bullish. And it really starts when we're very close to the weekly breakout. And it's really consolidating a lot of breakout energy in this 50 area. 592.60 is the line, is the weekly higher high for the S&P, which is coinciding directly with the 50. It's going to basically move around that 50 day to day, depending on how the chart moves. But again, this is really going to be a very tight bound range week. 587.66 is a number you do not want to see this whole entire week. You don't want to even see it printed, considering that would be a reversal of the momentum that we were having. Maybe we retrace down to 589, 590, right? Nice psychological number, 590 being the previous point. But we really just want to open S&P and just go, right? We do not want to see any bearish indication in the chart and get above that 50. You're in this gap fill area right here where it is a lot of energy easily to move through. So therefore, if we gap and go again on Monday, it would definitely result in a very bullish play on the S&P. Where would I expect to find sellers then? Around 597 where we go into the secondary gap fill, and between 5970 and 602, that's where I would expect to see some resistance if we get a gap and go. Maybe pull back down to the 50, retest the 50 afterwards. That would be the plan, right? So gap and go, kind of come back down to the 50, then go higher. That would be the ultimate plan. And we're going to talk about some of the news catalysts that could occur this week along with the Fed in the discussion part of the video. But again, this is where it gets interesting because 587.66 is also very close to the annual close of 586.08, right? 60 cents roughly to it. And therefore, we really don't want to see this 580.50 number come into play because a breakdown is sitting below a gap. So a breakdown below 587.66 is where I would be initiating short positions. I would be looking at maybe going a little heavier into those shorts or buying protection at that point, considering that we're getting into this territory of basically being in a very, very volatile expectation of the week. And also we really don't want to come down here. That'd be the third time we're down in this area and I don't want to be down there. Similarly, it's going to be the same story with the Nasdaq, right? Looking at the Nasdaq, again, this is one of a very, very similar note. We got a rotationary point of 516.13. We don't want to see that printed. We want to see Nasdaq get back above 519, easy gap fill coming right here. We really want to even open at the gap or open around 519.65 and then subsequently just keep pushing. That would probably be the most optimal strategy out there, is that we just keep pushing. Let's say we even gap above this gap, come back down, fill it through the gap fill, and then we head higher to the gap. That would be the ultimate bull strategy out there, because subsequently that would consolidate the gap, close the gap so we don't have to worry about it. We basically find buyers where people were FOMOing because they missed out on everything, and then subsequently coming to tackle this upper gap. Again, above 519.65, bullish positions, buy calls, sell puts. That's the whole gang is going bullish right there. That is continuation of the momentum and probably going to see a new all-time high heading into the inauguration. And subsequently, we don't really see any super bad news until we get into CPI. We got JOLTS job numbers, but any bad numbers on JOLTS will result in the Fed basically cutting rates sooner. We got a lot of Fed speakers, daily included, coming out and basically saying that they don't want to see market labor equilibrium maintain, oppose future deceleration. So they're basically saying is the jobs numbers that are expected to come out Wednesday or Tuesday of this week, is 7.7 million expected. Previously 7.744. This is 7.770. So they don't want to see this number go lower. They want to see this beat. They want to see, hey, the economy's strong. We got ADP coming in a little bit less, and also non-farm payrolls. Just a sneak peek for that. 130, 154 versus 227, 194. This would be bad for the Fed. These numbers coming in line would signify to the Fed, hey, you may need to step in. The market will interpret this bullish. These odds will get significantly different, and that could also result in a bullish play in the market. I don't think there is any way for this week to be a bearish week because the market will interpret any bad news as Fed rate cuts. Fed rate cut equal market go higher. So again, that is what we have to see is going to play out in the markets and how everything's going to play out. So simply put right here, we want to see these gaps get filled. We want to get above 519.65. We want to basically not see 505 get printed again. That would be the week. We don't want to even see the annual close, which is where the 50-day moving average is sitting at 511.23 and 511.22 respectively. That is where we don't want to see. We don't want to see anything below 516.13, right? And the NASDAQ, I think, especially with NVIDIA and the CES, is going to be a bullish week for them, especially when Apple sold off. Again, we'll get into Apple in just a bit. And Bitcoin trying to get back above that 100K. So there's a lot of risk on mentality in the market. And let's jump over to the Russell lastly. The Russell is probably the biggest pounder out there. It moved steeply down, really didn't get a hard rebound in it. So this is going to be going through easy volume territory, right? If we pull up basically the volume profile right here, notice in this section right here, there is nothing at 227. So that price action can easily move through there. The first resistance obviously be around that 229, 230 number, which is where the 50-day moving average. I'd be very surprised if the Russell manages to break through that on the first try. If it does, congratulations, I'm in the Russell, so I'd be very, very happy with that number. But I really want to see a break and then a retest of it. I just don't want to see us shed right through it like we did right here, right? Where we just launched off of it. And then subsequently what happened? We launched right back through it. We don't want to see that. So for the Russell, it's a very simple looking at the rotation, 224. 83, 222, really don't want to get that printed again. That's the number we don't want to get printed like the other indexes. And 217 is a weekly breakdown and looking to target the 200-day moving average. So again, probably buying protection below 222, round number 222, 221. Be the area by buying protection on the Russell, and then subsequently breaking above, buying shares, buying companies inside the Russell if you want to target individual companies. But I just think the index is extremely undervalued. I think small caps, VO, Russell is going to be the play for 2025. That's just my personal opinion. Do as you guys may, but make sure you guys follow some form of the levels and understand where you need to get in, where you need to get out. Now, as promised, let's just dive into these big caps, starting with Dr. Apple. Had a rough week below the yearly close. Again, Apple didn't really have a sell-off like the rest of the market, so we could be retracing back to this point that we basically found resistance previously, but we're also nowhere near the previous all-time highs, right? So real support is 237. I wouldn't be surprised if Apple doesn't come back down. You really don't have a cult following like Tesla. This was just impressive. This was just damn impressive, like Tesla, getting right back above that annual close for the weekly level. We did have a weekly breakdown on Tesla. So again, that's going to be a pretty bad one for Tesla. But let's just clean that chart up for you guys so I can actually show you where we're going to be going with Tesla. We're actually going to basically break this out this way. Again, the previous all-time high, 214.50, was where we really want to see Tesla around. Pretty massive range. So Tesla, any game in town, right? So doing the same for Apple, right? We're clearing up these chart levels for you guys. And again, the rotationary point on Apple is going to be the annual close, 241.82 weekly breakdown, 253.50 weekly breakup. That's where I would be kind of looking. I want to see above 250. That's where Apple, I think, starts getting bullish. I do think you're going to break down to 237. That's just my personal opinion. You don't have a lot of momentum going. You don't have a lot of volume going to the upside, and Apple can trade independently off the stock market because, again, it's weighted pretty heavy in the stock market, but it's not the only stock out there. Could see a big rebound on Netflix earnings with it, right? And we're going to see bank earnings later next week. So again, looking to target Apple around 237. I think IWM is a better play. I think the S&P is a better play. NASDAQ may be getting into like balanced territory right now, but that's just my personal opinion. Another one that out there, Microsoft didn't do as well, is sitting right at that annual close level and is concerning to me. Number one, I'm sitting in the NASDAQ and also in Microsoft right now, but having a wiki candle to the downside gives me some momentum for the week. I really want to see 427 get broken again. I want to see Microsoft back above these moving averages to then be more bullish on it and then rotate that position and roll it. Right now we close above the annual close, which is good, but that Thursday breakdown was concerning. I will be keeping an eye on Microsoft because this is one of those positions that is more exposure than I personally would like. However, if you're looking to buy Microsoft, it wouldn't necessarily be in a bad opportunity right now. From the recent highs, it was down 8%. Right now, down approximately 6.5%. So again, NASDAQ could lead the markets, chips could lead the market, and Microsoft could get a boost off of it. Similarly, AI stocks like Meta, right? Nice weekly consolidation in this region. So we're just consolidating in this region again with the chart. And again, it's a pretty nice bullish setup for the week. Two consolidating weeks within one another. The coil is getting tighter and tighter, and they try to break out to the upside. So now we want to see, is the momentum going to sustain? Is Meta going to have another one of these rallies like we had over here and subsequently head higher? Kind of seeing that W pattern getting forming here. So again, finding support around the 50, double bounce off the 50, did close one day below. That was a little concerning, and subsequently above its annual close. Again, looking like it's pretty darn strong. Speaking of strong, NVIDIA got back above the 50. Nice, beautiful weekly breakout off of it. Now we go to look for another massive ranging week, which is the entire span of this freaking move. So again, we really want to see the 50 is going to be the crucial point on it, right? We're going to see, can it sustain this 50-day moving average? That's going to be the rotationary point for NVIDIA. We do not want to see below the 50 again. We don't want to see below 134, which is the annual close. It's up 6%. So again, NVIDIA could do one of its crazy things. I think this is going to be up at 160 prior to its earnings. Just my price target analysis. Again, I own NVIDIA shares, full disclosure right there. Similarly, chip stocks like AMD trying to get back up above water. On the weekly level, that's 3 consecutive weeks that have been closing in this region. So definitely in a bullish approach right here. Has a lot of momentum to the upside possibly. As we see here with the weekly breakout, we are essentially right at that level where things get very, very interesting on AMD. And subsequently, we're above that annual close, right around that point that we want to be at. And just to clean the chart up a little bit for you guys, right? Annual close at 120, rotating above, kind of forming that candle, right? Kind of forming that bottom right here. So I definitely would like to see this thing start pushing and pushing to new all-time, not new all-time highs, but new highs at least, forming a little bit of a bottom here. And also last but not least, AVGO added to a position on Thursday on it, right? Sitting right in this consolidatory period. The one concerning part was that it sold off a little bit into after hours, but it's sitting right around that annual close. So it could be one of these kind of just consolidating like we saw NVIDIA consolidate for quite some time. I don't expect a large move out of AVGO. However, if NVIDIA sparks something, we definitely could see NVIDIA, AVGO, AMD, Broadcom, Qualcomm, all of them moving coincidentally with one another as chips push higher. Remember SOXX getting above that 50 NVIDIA high weighting. Now our chip's going to get bullish again, getting above that 200-day moving average. So we have to see how that all plays out. Now, guys, we're going to jump over to the biggest winners and losers, where we're going to be back afterwards to discuss the key news events for this week, where we think the market's going, and any other fun discuss topics that come about. So I'll see you guys in
Beginning the first week of 2025, the markets are actually a little bit bipolar. This is not what I was expecting at all. In fact, I was expecting this thing just keep shooting up. However, on the 5-day, it is up at around 0.86%. And as of Friday, it did a pretty big jump at 1.26% on the S&P 500. When taking a look at the dividend hikes, we already got our first one for 2025, and it was the company Alamo Group hikes the dividend by a whopping 15.4% to 30 cents quarterly. The ticker for that is ALG. And so far, this has been the only company that has increased their dividends in 2025. Now, we actually do have upcoming earnings this week, and nothing too notable just yet. However, the following week is when we are getting a lot of good earnings. But for this week, we got on Monday only one company. We got the company Commercial Metals, I think it is, RPM, AZZ, Lindsay, I think that's how you say it, Simulations Plus, Richard Electronics on Tuesday. Wednesday, we got Jeffrey, Simply Good, Helen of Troy, Penguin, Saratoga, and a couple more. And on Thursday, again, we got NTI, KP Home, Price Smart, E2 Open, I think that's how you say it, Accolade, and what was Concrete Pumping Holdings. Sure. And on Friday, we got Tilray, Delta, Walgreens. That was going to be an interesting one. Constellation Brands, Neogen, and TD Synex. So jumping now into the heat map, we can see that there's a lot of red, right? There is a lot of red on the week, but the green actually is in the energy sector of all places, but we'll get to that in just one second. Starting with the technology sector, the worst performer here, it is the company Apple of all things, losing 6.05%, and the best performer, it is the company Uber, gaining 4.92%. Looking now into the consumer cyclicals, we got the worst performer being none other than the company Tesla, losing 9.62%, and the best performer, it's well, not all of them gained here, but it seems to be the company, guys, Domino's Pizza, gaining 1.26% on the week. Then the consumer defensives, once again, a whole lot of red here. In fact, Costco lost its $1,000 status, but the worst performer was the company Brown-Forman Corp, losing 8.21%. And the best performer in the whole entire sector seems to be the company Altria Group, gaining 1.03%. Looking now into the financials, we can see once again a whole lot of red here. The worst performer in this sector seems to be the company BlackRock, losing 3.17%. And the best performer, it is none other than the company, guys, Citizens Financial Group, gaining 1.5%. Now into the communications, we can see the worst performer, it is Netflix, losing 4.66%, and the best performer, it is this company right here at the bottom, Paramount Global, gaining 2.2%. Into now the healthcare sector, actually 50-50. This is the most 50-50 that we have seen so far. Worst performer here, this is actually a little bit difficult to find, but it seems to be this one, guys, Align Technologies, losing 3.36%. But you also have companies like Gilead losing 3.18%. Close second, right? Close second. Then the best performer, it is the company Moderna, gaining 4.33% on the week. Looking now into the industrials, worst performer here, it is the company, I was going to say Delta or United Airlines. However, it is, of course, Boeing, losing 5.81%. And the best performer in the whole entire sector seems to be this one right over here, guys, JB Hunt Transport Services, gaining 2.21%. Into now the real estate sector. Wow. Guys, realty income, by the way, it is about to be, it's actually very, very close to that 52-week low from last year, around $48 or so. So you do have the chance to buy it again near that point. So I don't know. People say that it's bad. People say that there's issues with it. But at the end of the day, guys, this thing did go up to $63, if I'm not mistaken, recently, and then crashed back down again. So you have another opportunity right now. Nonetheless, though, the worst performer seems to be none other than this company over here, Federal Realty Investment Trust, losing 2.8%. And the best performer, it is none other than Simon Property, gaining 1.31%. Now into the energy sector. All of them gained. That's absolutely nuts. All of them gained. Not a single loser. The one that gained the least was the company ExxonMobil, only gaining 1.29%. And the best performer in the whole entire sector, it is, wow, that is a whole lot of green in the oil and gas, right? whole lot of green in oil and gas seems to be, guys, none other than the company Devon Energy, gaining 9.06%. Looking now into the utilities, the worst performer here, it is none other than, let me see if I can find it really quickly. Ooh, it seems to be this one over here, CMP, losing 2.25%. Wow. Then you got another one over here that was LNT, basically the same, 2.2%. But again, the worst performer was CMP, CenterPoint Energy, losing 2.25%. And the best performer, it is none other than, wow, Vistra, gaining 12.66%. Absolutely nuts right there. Absolutely nuts. And you know what? I really should do an analysis on this company because I don't know anything about this company. It's a utility company, so we can't do this kind of free cash flow, but I really would like to see their fundamentals because those kinds of gains are a little bit nuts, right? So looking now into the basic materials, worst performer here was the company PPG, losing 5.74%. And the best performer, actually only 3 of them gained, and those 3 were Newman Corp, gaining only 0.05%. Then followed up by the company CF Industry Holdings, gaining 4.02%, and then the best performer, which is Mosaic Company, gaining 4.44%. All in all, I don't know. Things are not as we thought they were going to be. I honestly think things were going to be a whole lot greener, but we shall see what happens. I do know that Ghost has been telling me that Goldman Sachs is projecting a massive jump in the markets come March, something like that. So we shall see. Again, earnings is going to be a big catalyst, as well as jobs, which is coming out on Friday. And then on top of that, CPI and the FOMC that's happening at the end of the month as well. So we have a lot to look forward to. It's a brand new year. Let's see what happens. No matter what, guys, whether the markets are red or green, at the end of the day, we can all make money. And with that, that pretty much does it for this segment. Take it away, Mike.
So, I want to start off by asking, where do you think the net speculative positions are going to come in, considering they haven't published them for 2 consecutive weeks?
Well, I don't know. I mean, markets have been a little bit volatile since the beginning of the year and kind of unprecedented. We were not thinking about this at all. We were thinking massive skyrocket rally at the beginning of the year, and we did not get it. I mean, we kind of got it, but it wasn't anything like we had the previous years. So we may actually see them increase their net speculative positions.
I think they're not publishing it because they're short, right? If we look at how the market's been acting recently, with like TLT, for example, right? Like, is this thing finally finding a bottom? Is the market finally going to start rallying, right? Like, again, we have NVIDIA this week with its expected to come out with its 5000 series graphics cards. That's going to be
bullish. Yeah.
Yeah. So now the question is this buy the rumor, sell the news type of event? Or is this like
a massive skyrocket rally afterwards?
Yeah. And the thing is, I'm leaning towards the latter, like you said, because subsequently NVIDIA's done nothing while like you got Apple, Microsoft, all these had their rally in November, December, whereas NVIDIA was just a stinky butt the whole time. So I agree. It's really going to come down to
and also not to mention, I do believe Nvidia hit that 50 or got near that 52-week low.
Yeah, it blew. So the thing is, like, Nvidia came down, it was just making lower lows, right? So lower low, and then finally it's basically I see it now, and I actually didn't notice until we started talking. An inverted head and shoulders kind of forming right here. So it definitely could play out to the bull side, right? If there's just a simple pattern playing out. I simply think that we're going to get a bullish rally on the NASDAQ because 401k money, job numbers, and let me know if you agree with this sentiment. Let's actually dive into job numbers real quick. Sure. With the job numbers expectations, right? Jolts, let's go through expectations first, and then we'll get into like my theory. 7.77 versus 7.744 previously. So this is openings. ADP 132 versus 146. Again, I've taken ADP and I've just thrown it out the window. It's probably the most useless number in the market, and the market doesn't even treat it with any respect anymore. I think them having this as like 3 stars, like super critical event. I'm like,
it's not. Honestly, yeah, we stopped caring about that. It does give a pretty good. It does give a pretty good like
I missed
feel,
this.
but what
minutes? We got Fed minutes this week.
When?
I missed this.
Is that when? Wednesday?
Yeah, and then apparently Thursday is a holiday.
Why is Thursday a holiday?
United States National Day. I don't know why,
Okay.
but it is apparently. So
What?
we're gonna get
What markets
Barkin speaking. We're gonna get multiple Fed members speaking that day, and then Friday we get the job numbers. So, boy, that threw me for a ringer. 154 versus 227 previously. 130 versus 194 for private. So
Wow. Thank you for zooming in.
yeah, I was like, yeah, let me make
I
this.
can't even see that. Yeah. So wow. It's non-farm payrolls 227 down to 154.
Unemployment
Wow.
staying around 4.2. That's
Yeah.
Now, I do want to bring your attention to what the Fed
Yep.
members talked about, how Daly was talking about labor market equilibrium maintained, opposes further deceleration. Daly is one of the hawks on the Fed. So looking at this, that speech, plus this is my theory, whatever number comes in, let's say we miss completely. Market rallies because that means Fed rate cuts.
That's true. It's like no matter what, yeah, that's
If
true.
it comes in good, oh great,
Market
strong
rallies,
economy,
market rallies
rallies.
because soft landing. Because
Yeah.
soft landing.
Yes,
There you
there's
go.
no
It's like no matter
there's
what
no
happens.
bearish theory possible with this,
Right.
unless. Well, I was going to say negative, but I don't see negative actually causing. A negative would basically take this, crank it up to like no tomorrow. Like
Right.
we would be getting January, February, March rate cuts then. You would really accelerate the Fed's plan.
Right. I think the only negative thing that could occur at this point is during FOMCs. If Jerome Powell comes out being like, nope, it looks like we're gonna pause, and we are most likely going to increase hike rates next time. That's like the
hiking
only
rates is
negative.
but you gotta let's theory craft for a minute about what that would require. That would require inflation getting significantly above 4%, right? Like you would have to, not even like a dip up, you would have to see a significant steady trend on inflation,
Right.
for it to even remotely. And again,
But to be fair, we are seeing that though. At least we're seeing that. We're seeing not. We still need more months, but we are seeing that slow, steady increase in inflation to the point that last month in December we did have Powell, the Fed change their SEP to now include a higher inflation number next year or this year technically.
yeah, but the thing is, I want to bring CPI up just for a second. We've talked about this on the CPI event where we were talking because now you're averaging this slope in right here where it's basically just really, really flat. You're starting because the first month this started was 9/11. And if we go back, we start seeing that slope like really get averaged in where you're no longer having this big dilution on the left. I personally,
Right, because the year over year, because the window keeps changing. Even
Yeah.
Powell said that too.
Yeah, so I don't disagree that you could get it, right? I also don't want us to throw the baby out with the bathwater to basically say like you're not like right. I want to kind of speculate both sides where I don't think inflation is going to come down as fast as they predicted. I think it's going to be helped significantly because of one major thing, and that is drill, baby, drill like no tomorrow. And the thing
Right.
is, with oil is scaring me right now. The reason I say that is because number one, you're just rocketing up on Biden's thing of like all the stupid crap he's doing, that like cutting leases now, making it basically sending landmines for the incoming administration. And
No. Say that again. Say that again. Like he's allowing what leases now?
he's canceling them even more. He's basically blocking.
canceling
he's,
them.
He,
Okay.
he's basically setting up more things for Trump to do, have to do in order to get oil down, right? So Trump
Not really, because in reality, all Biden canceling leases is just like, all right, Trump comes in and puts it back on. Like it's an
True.
executive thing. It's not. It's easy sign signature of
But
a paper
do you
and
think
you're done.
do you think activist judges won't step in to try to basically
That's true.
be like, hey, we're gonna have to do X, Y, and Z, then him having to go through the court battles of this and that, right? Like it's a
That's
even
fair.
though we know it's gonna end in X, Y,
Right.
and Z. How long does it take to get there? What damage occurs, right? Because companies are spending money on equipment. They're spending money on like not being able to drill. They're spending like there's damage per day being done. And the scary thing is of how fast oil is going up right now. It's not going to help you in the next reports, right? This is a negative against the next reports, which could definitely spark some correction in the markets.
Right.
But we really just need to see those things sub 60. That's where oil prices really need to go. I remember under a Trump presidency in 2016, it was like $40 a barrel, right? Let's actually just zoom out just so I'm not BSing everyone here. So like 2016, right? Oil was around 34 to about 60, right? Going into 2018. But when we had the fun drop off a cliff in oil prices.
And then negatives, yep.
So again, but you had considerably cheaper energy under Trump administration. So again, let's see how this all plays out. We haven't broken this triangle out yet, but we're definitely, if you're looking to short oil and you're thinking Trump is going to negatively affect oil prices, is probably one of the best places to be right now in like consolidatory period. And it's going to be interesting, right? How this is going to, I think this is going to be the biggest player in CPI, because we know that home prices are not going to move 1 inch, which is kind of interesting how we're getting this like lull period between September and November, and basically how it's all playing out through the markets.
Right. And by the way, I'm so sorry if anybody's hearing the baby cry, but it is what it is, right? Yeah. It is what it is. No, but I mean, we are seeing that consolidation when it comes to home prices, and that is something that even Trump wants to do, which is lower.
Yeah.
So,
and also like how are they gonna basically achieve that necessarily with everything? Like I think the biggest thing is going to be the bond market. If we look at the bond market, it's just been cranking, right? Like we mentioned in TLT, the 30 and the 20. So with those higher prices, right, like, and also the mortgage rates just basically doing everything to basically stick it to the Fed, how is this yield gonna play out, right? Like the longer dated yields are pushing higher. We're seeing the 10 on Friday basically pushing higher, which directly correlates to mortgage rates. So it's gonna be an interesting battle with home prices, especially as you've and we've discussed on this channel, where as mortgage rates go down, home prices go up because the fervency of buying goes up. So it's gonna be very, very interesting with that.
There are a lot of people still on the sidelines waiting to buy their first home, including myself.
Yeah.
But that's basically, people are just waiting for that to happen. People are just waiting for any type of
relief
of relief, right? Of relief to go buy into property.
And just to wrap it up, right? Like, let's take a look at the fear and greed index, as we always do. You know, gotta love it. 32. This thing was like touching extreme fear at one point during this week. It was like right at the border at 25, 26. I think you're going to see greed this week. NVIDIA has the capability to push us up. Job numbers, Fed minutes, all of that has... The Fed minutes aren't really a news catalyst event anymore because they're not going to surprise anyone.
No. We already know exactly what... We already know exactly what the stuff the Fed said in December.
Yep. So I think the biggest thing this week's going to be the NVIDIA CES 2025. I think this is going to be the biggest thing to come out. Starts tomorrow. And it starts with Jen Sung's keynote speech, right? So that's the thing that's going to be all eyes on before job numbers. And I think job numbers are just going to bolster whatever reaction we get out of CES.
It's true.
So
it's true.
Thank you guys so much for watching. Hope you guys had a wonderful weekend and great start to your week. Make sure you guys check out the video over here on the latest news in the market, what we were looking on Friday. So check that one out. And again, thank you all so much for watching, and I hope to see you guys in the next one.
Peace out.